Hello and welcome to Dynamic Trader Tutorials, the price series. This is tutorial number 4, Trend Reversal Targets with End of Wave Target Zone. In this tutorial, we're going to learn how to identify in advance the high probability, narrow range price target zone for the end of Wave 5 and C. So let's get started with Bob Miner, founder and president of Dynamic Traders Group.
Hello, I'm Robert Miner, the founder of Dynamic Traders Group, and welcome to this price tutorial. This tutorial I've called Extraordinarily Accurate End-of-Wave Price Target Zones. You're going to learn how to project very narrow-range price target zones to complete two of the most frequent patterns that we find in any market in any time frame. Now, we call them end-of-wave patterns, but don't worry, you're not going to have to learn or become an expert in Elliott wave. We're going to take just two of the most frequent trend and counter-trend patterns, and you're going to learn how to identify in advance, to pinpoint in advance, the very narrow-range price zone that should complete these patterns. So let's get started, and let's learn first about the simple ABC corrective pattern and how we project the end of that pattern in advance so that we're prepared for our trend reversal trade strategies. Let's get started.
That's good. Okay, let's get started by looking at ABC correction price targets. A simple ABC correction is the most frequent type of correction. Using this system, we can project in advance the most probable price target where the ABC correction will be complete. Now, to project the probable price target to end an ABC correction, three sets of projections are made. First, we make internal retracements, then we make external retracements of wave B, and then finally, the alternate price projections of wave A. Let's take a look at an example.
There are three different sets of price projections that we make to help identify the end of an ABC correction. So rather showing those to you in advance out of context of a chart, let's just take a market and see how we would do the price projections to identify the end of wave C of an ABC correction. We have up the EMC stock data, 60-minute data. And we can see that it's had a sharp rally and it's a decline, another small rally and a decline to a new low. We're going under the assumption that this market is in a bull trend and that the decline from the high in this chart is making a correction, and so far it has at least the potential for an ABC type correction. So our objective is to identify the end of the C section of the ABC correction. So a possibility of an A, a B, and we want to identify where the high probability specific target would be for the wave C. Now, we don't know if this correction is going to end as an ABC, or it may not even be a correction. It may continue to a new low. But we're going under the assumption that it's in a bull trend, it's making a correction, and so far it's meeting all the conditions for a three-section ABC correction. So the first set of projections that we do is your basic retracements. We call them dynamic retracements or internal retracements. You learned all about those in the first and second tutorial of this series. And we have the 38, 50, 62, and 78.6%. And ABC corrections usually terminate in the 50 to 62% retracement zone, and usually very near either the 50 or 62% retracement. And the maximum retracement we anticipate for an ABC correction is around 78.6%. That's the maximum. So we have these retracements on it. Oh yes, by the way, the 38.2% is usually not a retracement where corrections end. It's usually temporary support or resistance, just like it was in this case where we had a short-term low, which we've labeled an A, and then the market rallied and continued to a new low. We can just take that off. So 38.2% is very unusual for a correction to end at that retracement level. So now we have the 50, 62, and 78.6%. So the question is, how do we know in advance, or at least have a good guess or high probability of which retracement level the correction is liable to end? So we have to do two other sets of price projections. We have to do the external retracements, and we do the alternate price projections. And you learned about alternate price projections and external retracements in the second and third tutorial of this series, but let's show you what those are right now. External retracements are greater than 100%, and so let's do the external retracements of the wave B or B section. So we have the 127%, 162%, and 262% external retracement. So we usually find that a wave C will terminate by around the 162% external retracement. And as we can see with the data on this chart, it's already reached that level. Let me just go ahead and take off the 127. So far we have our internal retracements. Those are the typical retracements that most traders are familiar with. We had our external retracements. Those are the ones greater than 100%. We're showing the 162% and the 262. The 162% is thick as opposed to the thin line of the 262 because it has a higher probability of completing this C section coming down. So the third projection that we make, set of projections, is the alternate price projections. And we measure the range of section A, and we project from the end of the section B the 62%, the 100%, and the 162% alternate price projections. So what we look for, is there an area or relatively narrow zone to which has one projection from each of the sets. And the two primary sets we're interested in are the internal retracements and the alternate price projections. The external retracements are important, but we usually focus in around that 100% alternate price projection and one of the retracements, and then we see if one of the external retracements falls near there. Well, we have one projection from each of the three sets, all within a fairly narrow range. We have the 162% external retracement. We have the 100% alternate price projection, measuring section A, projecting it from B, and the 62% retracement. This zone has a high probability of completing this ABC correction, and then followed by a resumption of the bull trend to a new high. If the market were to take out this zone, then more than likely we can see right around the 1245 to 1230 includes one projection from each of those sets as well. So let's focus in. I'm going to just clean the chart up a bit here. Let's focus in on this zone because now we've identified in advance, that's what we call the end of wave C zone. Okay, that's where if the market is making an ABC correction, it has the highest probability of being complete right in this zone around 1284 to 1271. So let's advance the data and see what we find. As of the last bar on the chart, and this again 60-minute data, the market has spiked down and it's just tagged the 62% retracement, which is the extreme of the high probability end of wave C target zone. So let's go add some more data on here. Now we've taken out this little swing high probability that this low is complete. Add some more data and we can see the market has come up quite strongly. So we were able to identify the high probability end of wave C zone in advance, and that's exactly where the ABC correction made its low. Now, every market isn't going to make a three-wave or three-swing ABC correction, but once the conditions are in place for that possibility, we make the end of wave C targets, and if the market reaches there, we have a high probability of completing an ABC. So now we know how we make the end of wave C target zones. Let's do several more until it becomes second nature to you. And we do the external retracements, which those retracement lines will be shown in green. We do the alternate price projection, those lines will be shown in red. And we do the internal or dynamic retracements, and those lines will be shown in blue. And we look for relatively narrow ranges, which ideally have one projection from each of the three sets.
Okay, let's get into these ABC correction price projections a little more detailed for the end of wave C. Now, the first thing we're going to look at is internal retracements. The internal retracements we're going to look at are 50%, 61.8%, and 78.6%. The typical ABC retracement zone is 50% to 61.8%. That's where these retracements are most likely to happen. The maximum ABC retracement is typically 78.6%. So that's the end of wave C price projections. The next thing that we would project are the external retracements of wave B, which are 127%, 162%, and 262%. 127% and 162% are the most frequent wave C targets, and then 262% is an extreme target. We don't see that as often, but we do see that sometimes. So now we've done internal retracements, external retracements. The next thing we need to do is alternate price projections of wave A. Now those ratios are 61.8%, 100%, and 162%. The 100% alternate price projection of wave A, projected from the end of wave B, is the most frequent target for the end of wave C. So when we add all of those together, we get the end of wave C target zone. The ideal end of wave C target zone includes one final projection from each of the three sets that we just talked about within a fairly narrow range. Okay, let's take a look at that.
Well, let's take a look at some very short-term data. Let's look at the S&P 5-minute data. In fact, this example is taken just from yesterday. And we just see whether it's intraday data or daily data or weekly data, any time frame data, any market, this whole dynamic trading approach works, and these end-of-wave targets work. So in this case, maybe you're a day trader and you're looking for an ideal place to, in this case, short the market that's been in a bear trend on a potential ABC correction. So we have what we call an Elliott wave turns, an impulsive decline. Otherwise, the market is in a bear trend, and we have the possibility of it making an ABC correction. And so far, we've had one swing up, one down, so we've made the A and B legs, and so we're looking for the potential end of wave C target. We want to identify that in advance. So let's go through the process. We first do our internal or dynamic retracements. Now, as of the last bar in this chart, the market's already exceeded the 50% retracement, so we might as well take it off. So our question would be, where's the high probability end of wave C? Is it around the 62% retracement or 78.6%? Those are less than 2 points from each other. But for very short-term day traders, 2 points can be a lot of money. So we've done our internal retracements. Let's do our external retracements of this section B. And we can see that it's already well above the 127, but the 162% external retracement of B is right around where the 62% retracement is. And the 262 external retracement is almost overlapping with the 78.6% retracement. So far in advance, the highest probability zone to complete this wave C is right about where the market is now, around 265, 265.50, which is the 162% external retracement of B, and the 62% internal retracement. Well, we still need to do our alternate price projections. So let's do those. We're going to measure the range of A, and we're going to make the projections from the wave B, the section B low. And right near our two targets we've already done is the 62% alternate price projection. And the 100% alternate price projection is a bit above. It's right in between the 62% retracement and the 78.6%. And the 162% alternate price projection is just way out of bounds there. It's almost above the high of the retracement zone. So we have a high probability of the end of wave C being made right around where the market is now, about 1264.75 to 1265.50, with a maximum probability of around 1266. So the important point here is we've identified what would be the probable and maximum targets for the wave C. Those are quite close together, but we know now that the market's reached at least the probable target, any sort of momentum reversal or could be candlestick reversal signal, any sort of minor reversal signal would indicate that this market has probably completed a correction, and we'd be able to enter a short trade with very, very minimal initial capital exposure. In fact, certainly less than 2 points and probably less than 1 point initial capital exposure. So let's add some data onto this chart. And there we had the market went up, came within a tick or so of the 100% alternate price projection, right back down into our high probability end of wave C target zone. And it's hovering in that end of wave C target zone, kind of sideways to down. There we go. It's coming down fairly strongly, very strongly now. Let me get the chart in line here. We'll add some more data. And it continues on to make a new low. Now remember, this is 5-minute data, so this is all happening intraday quite quickly. But boy, what great pieces of information we had here. If the market's in a bear trend, we're looking for an ABC correction, and we were able to identify the probable zone and the maximum area. So once this market got up to the probable area, any sort of reversal, short-term reversal setup would be an ideal position for a short trade with very minimal capital exposure, all because of our end of wave C target zones, identifying the high probability price target for the end of the wave C. Do you see how valuable this can be on intraday data when the market is setting up for this pattern? Now, every correction isn't an ABC, but when the conditions are in place for an ABC, when we're in a bear trend and we've made one section up and then a minor correction and then a new high, in other words, the conditions are in place for a probable A, B, and then probably working on a C, that's when we do our end of wave C price target zones to prepare us for the high probability target to complete the correction.
Now that we've looked at the 3 sets of price projections for the end of wave C, let's talk a little bit more about end of wave C price target projections. First, the end of wave price target technique can be used on any market and any time frame, just like anything else in the dynamic trader approach. We trade on certain assumptions, and in this particular approach, we always assume a correction will be at least 3 swings or an ABC pattern. Now, the correction may end up being more complex than that, but the initial strategy is to identify the price target where an ABC correction will end. All right, let's take a look at some more examples.
This data is the Japanese yen daily data, and of course everything we teach you is applicable to all markets and all time frames, from intraday data to daily to weekly to monthly data. Now the yen had a very sharp decline here recently, so our assumption is that it's in a bear trend and it's making a correction. As of the last bar in the chart, it's met the conditions for a potential A and B. So let's just put those on. Now, if the market's making a correction as we anticipate, it may make some type of correction other than an ABC, simple three-wave correction. Even though ABCs are the most frequent type of corrections, all corrections certainly don't make that pattern. But what we can do is we can identify now the high probability target for a wave C. If the market reaches that target, it could be a setup for a short trade with very small capital exposure. So if the market continued to advance beyond our probable wave C target, then at the least is we would have a small loss if we were taking a short trade from the target zone. So let's do the whole process, and it's real simple, just like we've done in the other examples. First, do our retracements. And we have those off. Now, which retracement is it most likely to, is the wave C most likely to make a high if it's making a wave C? Well, let's put our external retracements on, and then let's put our alternate price projections on. Let's see, did I hit the right click there? I think I missed my little click. Let me make sure I hit the bar right. There we go, and then we got that one. There we are. So we've got the alternate price projections. We've got the external retracements of this wave B, and our basic internal retracements of the whole range that's probably being corrected. Well, let's take off the 62% alternate price projection because it's below the market. And let's take a look at this zone just above the last bar on the chart. Now, some of these retracements, our projections are overlapping each other, so it's hard to read, but I can do this. I can show you that 118.11, that's the 100% alternate price projection. And I'll take that one off. 118.097 is 127% external retracement of B. Put that 100% back on. Right above it is the 50% retracement of the full retracement range, and right above that is 162% external retracement of B. Well, typically the wave C will, the maximum target will be around that 162% external retracement, and somewhere right around the 100% alternate price projection of wave A. So we have kind of a broad retracement zone here. And let me just see what it's bounded by, about 118.097 by 118.678, with an emphasis on the lower part of the zone where the 100% alternate price projection is and the 50% retracement. So right around in this zone is the most probable target to complete the wave C. Now, if it were to take this zone out, right around the 62% internal retracement, 162% alternate price projection is usually the maximum wave C, around the 162% alternate price projection of A, where wave C would equal 162% of A. But here's our high probability retracement zone. We would be anticipating the completion of an ABC correction if the market's making an ABC correction. And if the market reaches this zone, we would then use our short-term reversal strategies to position for a short trade with very minimal capital exposure. Let's add some bars on, a little narrow range reversal day there. And there we had a wide range outside reversal day, just poking into our high probability end of wave C target zone. So as of this bar, this is in fact the type of bar that's the type of reversal signal with these wide range outside days from the end of wave C target zone. So more than likely as of that bar, if this market is making an ABC, it's complete. And we'd initiate any short strategies. Little inside day and an inside day breakout with a very wide range down day. Let's add some more bars on. Market continues on to make a new low. So we can label this as the end of a wave C. And you can see how fantastic these end of wave price projections are, where we can identify in advance the high probability target to where the common and most frequent types of patterns will be complete. And once again, we never know in advance that the market is just making an ABC, but what we do know in advance is that the conditions for an ABC type correction have been set up, and then we can make our high probability end of wave C targets, and then we can use our trade strategies if the market reaches that target zone, and trade strategies with very, very minimal capital exposure. Well, let's look at another example, and let's go back to a stock. This is Dell daily data. You don't have to have intraday data to use what we're teaching you. It just depends on the time frame of trading. If you're a short-term intraday trader, yes, you're going to be using intraday data down to like 5-minute charts. If you have a job during the day, you're going to be using daily data and daily and 60-minute data, and update your position of the market at the end of the day to see if the market's in a position to complete a correction or a trend. Well, we're going to make our internal retracements. Just follow this process. It really goes quick once you know the process and once you know how to identify the relatively narrow range zone where all the projections fall. So Dell's in a bear trend. We have the possibility of it making an ABC. This again is a very recent example that we had in our newsletter. Take off this 38.2%. That, in fact, let me just show you once again. We can see that the wave A is only a couple ticks from that. But remember, the 38.2% rarely completes a correction, an ABC type correction. We have a potential A, potential B. Our objective is to identify the high probability target for the wave C. So we have our retracements on. Let's do our alternate price projections where we measure the length of wave A projecting from wave B. And then let's do the external retracements of this wave B. So we've done all three sets of our projections. And well, we've got a fantastic zone here identified. We have the zone that has the 162% external retracement of B. That's the green line. The 50% retracement of the entire range. And then the 100% alternate price projection of A, projected from B. So that is our high probability target zone for a wave C. It has one projection from each of the three sets, and it has, all three of the key ones, or two of the key ones other than the normal 50% retracement, and that's the 162% external retracement of B, and that's the high probability that the extreme of wave C will be around there. And then we have the 100% alternate price projection. That's the most typical symmetry we find in an ABC correction. So as of the last bar in the chart, we've reached that zone. We've got an inside day. So the market is in a position to complete an ABC correction. We don't know if it's going to complete an ABC. We do know it's in a position to complete an ABC in the ideal target zone. And in fact, I'm going to clean the chart up. In any sort of reversal signal is a setup for a short trade. Let's add some data on here. Pokes up a little bit higher, and then we've gone and we've taken out this little low of the inside day, a little bit lower, lower, and a new low. So once again, we did have an ABC correction complete right in the target zone that we identified in advance as the high probability target to complete an ABC. And again, I'm going to emphasize this in almost every example. We did not know that this market was going to make an ABC. What we did know is that the conditions were in place to complete the end of wave C, to complete an ABC correction, followed by a resumption of the bear trend. So we were in a position for, in this case, a short trade with very, very minimal capital exposure. And these setups happen in all markets and all time frames. And if we simply have the patience to wait for these kind of ideal setups, your trading results are probably going to increase and prosper dramatically.
Now, if you're using the dynamic trader approach, we cannot stress to you enough that you can only trade when you have an edge. Now, long-term success in trading requires that you be able to identify conditions that have a high probability outcome over and over again on a consistent basis. You need to wait until the minimum conditions for a pattern are complete before even considering the trade. Now, using this end-of-wave price target zone gives you a big edge to identify trade setups with minimal capital exposure.
Let's take a look at this 60-minute data of soybeans futures contract. Now, I realize that there's not nearly as many people that trade the commodity markets, commodity future markets, as used to, at least when I started trading in the mid-'80s, but I'd like to show this example that one is this approach we use is applicable to all markets and all time frames of all actively traded markets, including commodities. Plus, I'd also like to encourage you to consider trading commodities. A few of the commodities, particularly like gold and soybeans and a couple others, are great markets to trade. But also there's a good lesson to be learned with this market. So showing the data on the chart of this 60-minute data is we had a sharp decline, and then the market has made a rally so far off that decline, and we're going to go under the assumption that our trend and momentum analysis indicates that this market should be in a bear trend and any rallies should be corrections. So let's first put our retracements on and see where we're at. Now, as of the last bar in this chart, we had a big gap up, and we've already come to the 62% retracement. Well, to identify a potential ABC retracement with the end of wave C targets, we need a wave A or section A and or wave B or section B. And even though this market is actually approaching, which is typically the maximum retracement for a correction, we don't have any well-defined sections A and B which to use to make our alternate price projections and our external retracements. So far, even though the market has come up to this 62% retracement, from the pattern perspective, it's not in a high probability position to complete a corrective pattern, because corrective patterns should have at least, or not, I shouldn't say should, they typically have at least 3 sections or an ABC type of correction. Or it could be a more complicated type of correction, but we look for a minimum of 3. So far, this wouldn't be a market we would be doing an end of wave C projection for to help identify the end of the trend. Let's just add some bars and see if we add bars, if we get any additional information that might be helpful. Now the market is in a position to potentially complete an ABC correction if this market is in a bear trend. See, we had to wait, these are 60-minute bars. It was about 3 or 4 days later before we had a potential A and B of which we can make an end of wave C target zone out of. Now, we didn't know it was going to unfold in that manner, but if we simply look at the chart each day, see how it's unfolded, see if we get an ideal type of setup for us to make our end of wave C projections for a possible short trade in a bear trend. Well, we've got our retracements on already. Let's do our external retracements of wave B. And there's the 127, the 162 is already above the beginning of this internal retracement range, so we can just get rid of it. And then let's do our alternate price projections of wave A projected from the wave B low. And the 62% is below the wave A high. We can just take off that retracement as well. And look at what we have here. This is very instructive. First, we have a market that has reached the high probability target to complete a wave C. And that includes the 78.6% internal retracement, which is typically the maximum retracement for a correction. It's also the 127% external retracement of B, just a few points above the 78.6% retracement. And I'm just kind of erasing these lines so we can see because they're so close, they're overlapping. And then we have the 100% alternate price projection of A. So these are the three most typical targets, or the two of the most typical targets to end wave C, plus the maximum retracement typical for a ABC type correction. So, and as of the last bar in this chart, it was a gap opening day because that bar is the first 60-minute bar of a new day. These bars change colors each day. They alternate colors each day. That's how we can tell that here is the 60-minute bars for one day, and this blue bar is the first bar of trading of the next day. So now most people would think, oh my gracious, soybeans just had a gap open. It's very positive. Well, it had a gap open right into the probable target zone for the end of wave C. In fact, the maximum target zone for the end of wave C, because it's around the 78.6% retracement. So soybeans, as of this bar in the chart, are in the ideal position to consider a short trade for a potential end of wave C, and a short trade with very, very minimal capital exposure. That's the beauty of these end of wave price projection zones, is when a market reaches it and it's made the minimum conditions to complete the pattern and it's in the probable target zone, the capital exposure is so small to take these reversal trades. So let's add some data onto this chart. And we'll add some data in there. It's starting down very strongly now. Very strongly, and this ABC correction was complete right in the target zone that we identified in advance, and that's what's important, is these target zones are all identified in advance. We don't know if the market's going to reach that target zone, but what we do know is that the conditions are in place to complete this three-section correction if the market does reach it. And of course, the other good lesson here, and why I wanted to show you this example, again, it's a relatively recent example, is that the market had advanced sharply, very close to what is typically the extreme of a correction, but because it hadn't made at least two sections, in other words, hadn't completed a probable A, B, working on a C, and it just comes straight up, more than likely it wasn't the end of a correction, and whether it was or not, it simply wasn't the conditions that we would look for the correction to be complete. So we waited and we just viewed the market until the conditions were in place for a high probability end of an ABC correction.
Let's take a look at some rules for end of wave 5 target zones. Now remember that trends are frequently made with 5 sections or 5 additional smaller trends within them. If the conditions are complete for waves 1 through 4, then there's a high probability that the trend will be complete on the wave 5. Now to help you with this, there are 3 conditions to identify a potential 5-wave trend. Number 1, the wave 2 correction cannot exceed the beginning of wave 1. Second, the wave 4 cannot trade into the range of wave 1. And finally, waves 2 and 4 corrections must be at least the 38.2% retracement. Now remember, just as we talked about before, there are always 3 sets of price projections made for the end of wave 5 target zone. Let's take a look at some examples.
The second pattern we're going to look at for our end-of-wave price target zones is called a 5-wave trend. In Elliott wave terms, it's called an impulse trend. Now, the purpose of this tutorial is not to make you experts on Elliott wave, but it's to bring to your attention that trends frequently make 5 waves, and they're complete at the end of the 5th wave, or the 5th section. So let's take a look at some data and look at some basic conditions that we look at if a 5-wave pattern is being made. This is daily data of the S&P, and as of the last bar in this chart, we have 4 completed swings or waves, and I've labeled them 1, 2, 3, and 4. So how do we know if a market has completed 4 swings? What conditions or rules, basic conditions or rules, to say that we have 4 sections complete? Well, it's real simple. And by the way, this 5-wave trends are frequent in most markets and most time frames. Well, I should say all markets and all time frames. Now, every trend doesn't end or subdivide in 5 waves and end on the 5th section or 5th wave, but it's so frequent that when the conditions are in place with the 1 through 4 complete, that we always want to be aware of the probable target for the wave 5, because that's frequently where the trend will be complete. So with the data that we have on here, we've got labeled 1, 2, 3, and 4. Those are complete. And here's the conditions that need to be met. Number 1 is this, what we've labeled wave 2, or the first correction down from the beginning of the trend, can't exceed the beginning of the trend, or the beginning of the wave 1. And that's pretty basic, because it would be something else unfolding other than a 5-wave trend if that were the case. If we have the 3 and the 4 complete, 4 can't trade into the range of wave 1. So that's why I've just drawn a horizontal line across the top of wave 1, because if the market had traded below that wave 1 high, then it would void it as a probable 5-wave trend, and it would void it for us being able to do the end of wave 5 price targets. And those are basic Elliott wave rules. They're just real simple conditions. Now, what about any conditions for the waves 2 or 4? So we can call them a 1, 2, 3, and 4. Well, they should make retracements at least 38%. And you can see I've shown the 38% retracement of both the wave 1. So this, what we've labeled as wave 2, has declined below the 38% retracement. And what we've labeled the wave 4 has declined below the 38% retracement. Now, if we get into a lot more detail about Elliott wave and price, sometimes a 2 or a 4 will be less than a 38% retracement. But then we're getting into a little bit of paralysis of analysis and more detail than we want to. We want to keep it simple and look for the kind of ideal setups. And the ideal setup, so that we can meet the conditions that waves 1 through 4 are complete, is that they've each made a 38% retracement, minimum 38% retracement. And this potential wave 4 has not declined below the end of the wave 1. So all those conditions are met with the data that we're showing. So how do we project the end of the wave 5 target zone, the probable price target zone? Well, I'm going to take off these other lines on the chart just to clean the chart up so we don't have irrelevant lines on the chart. And as you'll remember with the end of wave C, or the, identifying the target zone for an ABC correction, we did 3 different sets of price projections, and that's what we're going to do at the end of wave 5. And then we're going to look and see if there is a relatively narrow range that has projections from each of the set to give us a target zone. So the first projection we're going to make is the 38% and 62% alternate price projection of waves 1 through 3.
Now I've got the 38 and the 62 checked off. So we're going to measure the range from the beginning of wave 1 to the end of wave 3, and we're going to make the 38 and 62% projection from, in this case, of the wave 4 low. So this is the 38% alternate price projection of the range of waves 1 through 3, and that's the 62% projection of the range of 1 through 3. Those are projected from the end of wave 4. Now there's two other projections we make. Another one is the 100% alternate price projection of wave 1. So we measure the range of wave 1 and we make that from the end of wave 4. So right around 12, 30, 20 is the 100% alternate price projection of the range of wave 1 made from wave 4 low. And the third projection we make is the external retracements of wave 4. And which external retracements are we going to make? It's going to be the 127 and the 162. And recall that those are the same two external retracements we made for the end of a wave C. So let's make those. Make the external retracements of wave 4. So we've made our three sets of projections. We've made the 38 and 62% alternate price projection of 1 through 3. We've done the 100% alternate price projection of 1. All those were made from the end of wave 4. And we've done the external retracements of wave 4, the 127 and 162. Now you don't need to memorize all these now because they'll be in one of the slides, text slides, all these projections that need to be made. So typically a wave 5 ends near either the 38% or the 62% alternate price projection of 1 through 3, and typically it doesn't exceed the 162% external retracement of 4. So we first focus on the 38 and 62. Now the 38 alternate price projection of 1 through 3 is below this high of wave 3, so it's not relevant. So what zone do we have one projection from each of the other sets? Well, we have that zone right here. This is the 100% alternate price projection of 1. It's 127% external retracement of 4. And it's the 62% alternate price projection of waves 1 through 3. So let me clean some of these lines off the chart. So the high probability target is not far above this market between about 1230 and 1241, with a probable extreme around 1249. Now you can see how valuable this information would be to be prepared in advance for the probable target zone to end the trend all the way going back about 2 months ago, and the probable extreme for that target around 162, external retracement of 4. So if the market were to rally into this zone, we'd be prepared for a top and a reversal. Well, let me add some bars on the chart. As of the last bar in the chart is reached into the high probability zone. So from a trading perspective, we would prepare for the end of the trend that began all the way back here where this little count began. Let's add some more bars. And we're still in the high probability zone. And we've gone above it. And we've just tagged what is probably the extreme. We just got what we call a snapback reversal day here, right from the extreme. And let's add some more bars, testing that high. And now we're well below the zone. I'm going to add quite a few more bars on. Well, pretty sharp decline from the exact target zone that we projected in advance as probably ending this 5-wave advance. So let me go ahead and add a number 5 on here. It went a little bit above the high probability zone and topped off near what we anticipated would be the extreme, the 162% external retracement of 4. And that was the high for several weeks so far as of the data on this chart at least, and a pretty substantial decline.
Now I hope you can see how valuable that would be to be prepared for the probable target zone to complete this trend. Well, let's look at some other examples.
So how do we make price projections for the end of Wave 5 target? First, there are three sets of projections that are made. We make the 38.2% and 61.8% alternate price projection of the range of waves 1 through 3 from the Wave 4 extreme. We make the 100% alternate price projection of the range of Wave 1 from the Wave 4 extreme, and we make the 127% and 162% external retracements of the Wave 4. Now, the most probable target zone will include one projection from each of these three sets of projections. Now, once a market reaches the end of Wave 5 target zone, you need to begin preparing for the end of the trend. Let's take a look at some examples.
This next example is a stock. It's Microsoft Daily, fairly recent data. And as of the last bar on the chart, it looks like it's made a nice 1, 2, 3, and 4. Just tagged the 38% retracement on this Wave 4 retracement, and it was above the 38.2% on the Wave 2. So it's met all the conditions for a possible Wave 1 through 4. And by the way, I just drew the horizontal line from the extreme of 1, and of course it's well below that line, so it hasn't traded above the extreme of Wave 1. So all of the conditions are in place for to make a 5-wave trend. Now we never know as of the last bar on this chart whether this trend is going to end on 5 waves. But because so many trends do once they've met the waves 1 through 4 conditions, that we always want to be prepared for the end of Wave 5 target zone for a high probability target to complete that trend. So let me clean the chart up a bit, and then let's do the three sets of projections. So the first set of projections, let's just do the external retracements of Wave 4, and I got to click on the right bar there. There we go. As of the last bar in the chart, it's reached the 127% external retracement, and more than likely the extreme is going to be around the 162. Let me do the alternate price projections. I'll first do the 100% of Wave 1. I'm going to measure the range of Wave 1. I'm going to project that range down from the Wave 4. So our 100% alternate price projection of 1 is right in between the two external retracements. Then what's the other two alternate price projections we do? Whoops. Let me click on there. We're going to do the 38 and the 62. So I'm going to measure the entire range from the beginning of 1 to the end of 3, and I'm going to project the 38 and the 62 from the end of the Wave 4. So we have our three sets of projections are complete. Let me clean the chart up here a bit. And where do we have a group that includes one projection from each of the three? Well, the group looks like it would be right around the 162 external retracement of 4, the 100% alternate price projection of 1, and the 38% alternate price projection of 1 through 3. That also falls right near the 127% external retracement of 4. So we have a zone here right around 2492 down to about 2457 or 57. So it's already, as of the last bar in this chart, reached the probable end of Wave 5 target zone. And this outlier, which is the 62% external retracement of the range of 1 through 3, should probably be the extreme because it's the outlier of those projections that we just made. But what a great piece of information we have now. We have the waves 1 through 4 conditions have been met. It's met those few simple conditions by Wave 4 not trading into the range of 1 or above the extreme of 1, by each of the corrections being at least 38%, and now we've made a new low, so all the conditions are in place to complete a 5-wave trend. Once again, we never know in advance what the pattern is going to be, but the conditions have been met, And we want to be prepared since we're in the price zone that has a high probability to complete this five-wave trend. And we'd use our other tools, momentum tools, etc., to help us identify if that five-wave trend should be near completion. But right now we're just going to look at price. Well, as of the last bar in the chart, we're at the extreme of this zone. That's the probable zone for the five-wave trend. So we'd want to be looking at trend reversal sort of trade strategies. And once again, just like that other example, it's gone down to the extreme. Let's go ahead and add some more bars. In fact, it's 3 days in a row it tagged that extreme. I'm going to keep adding some bars. And we have a very significant advance off that price zone. So it went, once again, I went a little bit beyond the probable target, most probable target, which included one projection from each of the three sets, but we were prepared for the end of this trend that had been going on for about 2 months. And we had actually the first daily reversal signal that we had was this last bar where the cursor is showing, which was another, looks like a snapback reversal day, right off which was the outlier of where the wave 5 should end. So do you see how valuable this can be to you to help identify the price zones where a trend is going to complete if the market has met the conditions for these waves 1 through 4, or the first 4 sections of the trend. Very valuable information for any market in any time frame. Let's look at some more examples.
Okay, now remember, the end of wave 5 price target zone projections work on all markets and work in all time frames. Once the simple conditions for waves 1 through 4 are complete, the end of wave 5 price target zones can be made. First you make the 3 sets of price projections, and then you see that the ideal end of wave 5 target zone is the range that includes one projection from each of the 3 sets of projections. Now, the dynamic trading way to trade is to be prepared in advance for the high probability trade setups with minimal capital exposure. Let's take a look at some more examples.
Well, let's take a look at an ETF, the Triple Q. This is the Triple Q daily. And as of the last bar in the chart, we got a potential 1, 2, 3, 4. It's met all the conditions. This wave 2 correction was equal or greater than 38.2%. The wave 4 was equal or greater than 38.2%. And the market hasn't traded into the range of wave 1. So as of the last bar, all of the basic conditions have been met for a potential 5-wave trend. Well, let's clean the chart up, and let's do our wave 5 targets, or wave 5 projections. So let's do the external retracements of 4. Got those on. And we have the 127%, 162% external retracement of 4. Let's do the, let me get the right, hit the tag there, right? We'll do the, no, not the alternate price projection. Sorry, get the right one. 100% alternate price projection of 1. And that's actually below the wave 3 high, so it's not even going to count. And then the 38 and 62% alternate price projections of the range of waves 1 through 3 projected from 4. And the 38% is also below the potential wave 3 high. So I'll just get rid of those. So I'll clean the chart up. And then we'll take a look at what's the probable target zone if this is making a wave 5. Now notice how I phrase that if it's making a 5-wave trend, we now have projected the probable target zone for that 5-wave trend, and it's right in this range of 42.89 to 43.64. And that's the probable target to complete this advance going back 2 or 3 months. If this market reaches that zone, more than likely it will be complete there. We don't know if it will or not. We don't know if it's going to make a 5-wave trend, but because they're so frequent, 5-wave trends, once the conditions for waves 1 through 4 are complete, we want to really be prepared if the market gets into that zone. So that was quick and simple to make that projection. As of the last bar on the chart, we're right in the middle of that zone, which includes the 62% alternate price projection of 1 through 3. Got a little reversal day there. Market coming down hard. It looks like that's about the last bar right up through today. So this market made a reversal and a decline so far for several weeks off the probable target zone that we projected in advance. And of course, like you've learned from earlier in this tutorial and all the other tutorials we've done, is the dynamic trading way is to be prepared for in advance for the high probability setups. And in this tutorial, we're teaching you the most probable counter trend price target zones and the most probable trend target zones. So we were prepared for this trend that began back in October to end in this price range. And that's exactly where it ended. How about intraday data? We've just seen some daily data so far. This is the NASDAQ intraday data, another very, very recent example. And we have a possible waves 1 through 4 complete. Once again, we don't know if it's going to end on a wave 5 or 5 sections down, but since the conditions for wave 4 have been met by both 2 and 4, making at least 38.2% retracements, hasn't traded into the range of wave 1, and that's all we got to do is just draw that line. If the market were to have traded above that line, then the conditions for waves 1 through 4 would not be valid, and we wouldn't be doing our end of wave price projections. Now, I'm just going to mention something in this section. If we have some Elliott wave fanatics, and I should say maybe academics that get paralysis of analysis of Elliott wave, they're going to say, yeah, that shouldn't be a wave 1. That didn't subdivide like a wave 1. We're not Elliott wave academics. We're using Elliott wave in very simple patterns, a couple patterns based on Elliott wave, to give us a strong probability of trend targets. And we're not going to get hung up on the minuscule subdivisions and that sort of thing. We had a decline, significant rally, another decline, rally. Now we've made a new low. What would our probable end of wave 5 target be? Let me do the 100% alternate price projection of 1. You see, we just do the same thing over and over again. Once the conditions are in place for a possible wave 5. Do the 38 and 62% alternate price projections of waves 1 through 3. And then we'll do our, let's see, our external retracements of wave 4, the 127 and 162. And then we'll take a look at that information and say, as of the last bar in the chart, now we can get rid of that 38, it's below or above the extreme of wave 3. Clean the chart up a bit. And what price zone includes one projection from each of the 3 sets? Well, it's this price zone right in here. That's the 100% alternate price projection of 1. It's the 127% external retracement of 4. And it's the 62% alternate price projection of the range of waves 1 through 3 projected from 4. So the high probability target to complete this 5-wave trend down, and this is 60-minute data. I think I mentioned that earlier. If I didn't, we want to make sure we understand that it's 60-minute data. This is the area of which more than likely that trend is going to be complete with an outside extreme around 1628. And again, we made these projections in advance. So we're prepared once price reaches this zone, we're going to use our reversal strategies to either exit a short trade and enter a long trade. To add some more bars, we got a rally so far, come down almost to test the low so far. And there we go, we've taken out that number 4 swing high, wave 4 swing high, significant advance with a low right in the price zone that we projected in advance. So we were prepared once the market reached this zone, the end of wave 5 price target zone, that the trend was probably nearly over and we'd be prepared for trend reversal strategies or exiting short trades. What a great piece of information. One is just understanding that frequently markets complete trends in 5 sections or 5 waves, and we identify if it's a potential 5-wave trend by if we have a 1, 2, 3, and 4 complete that meets just those simple conditions of the 4 not trading into the range of 1 and the 2 and the 4 having made at least 38.2% corrections. It works on intraday data, it works on daily data, it works on stocks, indexes, futures, currencies. In fact, let's take a little pause and get some text reminders of what we've just gone over, and then let's take a look at a currency example.
Okay, to show you more about how this works, Bob has prepared an end of wave 5 intraday 4x example. Now, the process to make the end of wave 5's price targets is the same with any market, any time frame, monthly data, daily data, weekly data, intraday data. But we only make trades for those markets where the high probability conditions are in place to complete a trend or a counter trend. If the conditions have not been made, we do not even consider the trade. Now remember, successful traders always identify their edge. If there's no edge, they don't trade.
This is the 15-minute data for British pound versus the US dollar. And as of the last bar in the chart, we have a possible 1, 2, 3, 4. It's met all the conditions for probable 4 sections or 4 waves. Both the 2 and the 4 have made at least 38% retracements. Market hasn't traded into the range of wave 1. So the conditions are in place. So if we've got 1, 2, 3, 4 complete, what's the high probability target zone for wave 5? Just let me erase that line. Let's do our all of our targets. So we do the 100% of wave 1, that range projected from that high of wave 4. Let me adjust the chart a bit here. Let's do the 38 and 62% of the range of waves 1 through 3 projected from 4. And then let's do the external retracements of this wave 4. So we've got all our projections complete. Let me just move the chart up here. And do we have a zone that includes one projection from each? Well, that zone is right down in here at 172.71 to 172.26, and it includes the 100% alternate price projection of the range of wave 1 from 4. It includes the 162% external retracement of 4 and the 62% alternate price projection of the range of waves 1 through 3 projected from 4. So we have kind of this first projection is just about even with 3, so it's pretty irrelevant. And then we have one other projection is the 127% external retracement of 4. So that would be a minimum target. This would be a probable target. And since we don't have any outliers beyond this little zone, more than likely that's the probable target and the extreme target. So if the market gets down anywhere close to this zone, more than likely it's completed the trend that began all the way back here several days ago, in fact 2 or 3 weeks ago on this 60-minute data. So let me just clean the chart up a bit, and then we'll add some bars on. Let's add some bars onto this chart and see if it reaches our zone. Oh, we didn't need that guy on there. And we've just gone beyond our probable minimum target. And we're about 1 or 2 pips from our probable zone. So we're in the area to where we want to be prepared with our trend reversal strategies. Let's add a few more bars. And it looks like, I paused the recording there just for a bit so I could add some more data on, because that took a little bit of time to add that data on, just to show you what the market did after this area. So another review here is we had a probable 4-wave decline. We identified what should be the minimum target for the wave 5 and the probable target. And the actual low was made about 2 pips from the probable target. So once we reached past this minimum and approached the probable target, we would be prepared for the end of that trend and any sort of trend reversal strategies that we use, either to cover a short position and consider a long position. So what valuable information that is. Now this is 60-minute, or excuse me, it's 15-minute data, not 60-minute. We had a decline that lasted several days, looks like about a week to 10 days, and we were able to identify the probable target zone. And again, it didn't reach exactly that target zone, but it came within just a couple, 3 pips of the high probability target zone. The most important thing is that we would be prepared once the market got down into this area to complete the trend and make a trend reversal so we'd cover longs or cover shorts and consider longs. And what a great piece of information that would be after having this consistent decline, then being prepared that more than likely that decline was about over, and we even identified the probable target, which would be the extreme of that decline. So foreign exchange markets, intraday futures or index markets, ETFs, stocks, futures, the procedure, the process is the same with each one of them. Let me show you just a couple more examples here. This is euro dollar, or excuse me, European currency versus the dollar 15-minute data. And as of the last bar in this chart, we've got a possible 1, 2, 3, and 4. Or do we? Has it met the conditions to consider that it's completed 4 swings and it's going to make a wave 5 or the 5th section to complete the trend? Well, the wave 2 made at least a 38% retracement. Wave 4 made greater than a 38.2% retracement. But notice how it traded over 3 bars above what was the wave 1 low. So that voids the ideal conditions for a 1, 2, 3, and 4 because it's traded into the range of the wave 1. So is this a 4 and is it going to make 5-wave decline? Well, it may, but since it's not the ideal conditions that we look for to do our end of wave price projections, as I'm teaching you in this tutorial, then we would void this as a probable 1, 2, 3, 4, 5, and we'd either have to use other tools or skip this market and go to another time frame or another market, because we want to, let me just put that low on there. We want to just look for the conditions with the high probability outcome. And this voids one of the conditions to call this a 1, 2, 3, and 4. Let me look at one more. This is bond market. What's the 60-minute data? We've got it labeled a 1, 2, 3, and 4. So is that good labeling for us to do our end of wave price projections for our end of wave 5? Well, one of the criteria is wave 4 and wave 2 should make a 38%, 38.2% retracement. So let's see. Wave 2 made a 38.2% retracement, or this potential wave 2. And let's do our wave 4. What we've labeled as wave 4 is way short of the 38.2% retracement. So it hasn't met, as of the last bar on this chart, this market hasn't met the ideal conditions that we look for to say, it's made waves 1 through 4 or sections 1 through 4 so we can make our end of wave 5 price target zone. Now this market may end up completing in this final section 5 up. But as far as doing our end of wave price projections, as I'm teaching you in this tutorial, we only want to make them when the basic conditions are met to complete waves 1 through 4. That's why I emphasize over and over again is that we want all the conditions to be in our favor to make the ideal projections for the end of a trend or a counter trend. And in this case, just like the last case, since it didn't make a 38.2% retracement, we're not going to call this a 1, 2, 3, 4 for our purposes. Alrighty, well, you've seen how we do the end of wave 5 price projections on several different types of markets, different time frames. The process is the same. We first identify the conditions to be able to say that waves 1 through 4 are complete, and then we do our 3 sets of projections. Then we look ideally where one projection from each set falls for the probable target for a wave 5. And depending on where the projections are, we can also identify the probable minimum, probable maximum target for that wave 5. So fantastic pieces of information to help identify the end of a trend. And we've also seen that all markets don't complete trends in 5 waves or 5 sections that meet the ideal conditions for those sections. So we just pass on those markets, at least applying this end of wave 5 target zone. There's lots of markets to trade, lots of time frames. There's no reason to try and force our analysis and our conditions in order to do the end of wave 5 price targets. So I'm glad you joined us for this tutorial. We've got one more little section before we wrap it up. But now you know all you need to know about identifying simple ABC corrections and end of wave 5 target zones and being prepared in advance for the high probability targets that will complete those frequent types of corrections and frequent types of trends.
Among the many other features in Dynamic Trader, one of the beauties is the ability to create one-click target zones. Now, Dynamic Trader is the only trading software with the end-of-wave price target zones built in and developed by Robert Miner almost 20 years ago. Using our software, the end-of-wave target zones can be made with just one click on a high or low. Let's take a look at how that's done.
Throughout this tutorial, we've shown how we make for the end of wave C to complete an ABC correction and the end of wave 5 to complete a 5-wave trend. We make 3 sets of projections for each of those to identify the end of the ABC or the end of the waves 1 through 5. Well, in Dynamic Trader program, you can do that with one click. And I'll use a couple examples that we've used in the tutorial. This is 60-minute gold data, gold futures data. And we have our retracements on already, but we have what's called the end of wave price routine, and we'll just click on the wave C, and we'll make those projections all at one time. And it's made several projections at one time, and they happen to just overlap right with the 50 and 62% retracement. So with one click, it's made the external retracements of B and the alternate price projections of A projected from the end of wave B. And it's tough to read them because they're overlapping with one another here. But that we call our one-click end of wave price target zone. And I'm just going to erase those retracements. And when the projections are made, it actually labels which type of pattern those projections are being made for, in this case a wave C. And of course that's in the first area of projections, that's right around where the low was made. Here's some S&P, our end of wave 5 target zone. Let me just click on the wave 5. We make those projections from the end of wave 4, and it makes all those projections that we made earlier, all those 3 sets of projections. We'll get rid of the lower one there, and we had identified that this zone was the probable zone and this was the extreme probable for the end of wave 5, which ended up being the exact top of the end of wave 5. And you can see how it labels each projection as part of the wave 5 group. So it just makes it a lot quicker and easier to make those projections, and it labels them of the type of projection too, whether it's a wave 5 or a C or one of the other patterns that we have our end of wave price projections for. So Dynamic Trader, it's one other way that once we developed this end of wave and pattern and price target methodology, we just streamlined it by making it one click rather than having to make all three sets of projections. But you can make those three sets of projections with about, well, most other technical analysis software. You can just do it a little quicker and faster with Dynamic Trader, and that's particularly helpful if you're doing intraday trading, because you want to make those projections pretty quickly. So that's the Dynamic Trader end-of-wave price target zones, and there's lots of choices on the colors that we can use of the lines and how we want to label them, whether we make them from the high or low or from the closes. So I just wanted to show you that, how we do it a little quicker and easier. Thanks so much for joining us for this tutorial in our price series, and I look forward to sharing more practical trading information with you in other tutorials that we have.
In this tutorial, you learned how to project in advance those high probability target zones to complete two of the most frequent types of patterns we find in any market and any time frame. That's the simple 5-wave pattern and the simple 3-wave pattern. And we call those the end-of-wave target zones. And it's something unique that I developed years ago that is only taught with the Dynamic Traders Group. And I want you to apply this to your trading every day because it's very practical, very simple, very quick to do. And if you apply this, I think you're going to find how extremely valuable it is for your trading. Well, I'm Robert Miner with Dynamic Traders Group, and thanks for joining me, and I look forward to sharing more tutorials both in this price series and in other series of tutorials that we have with you where we teach you unique and practical trade strategies. Thanks a lot for joining us, and good trading.
Okay, gang, that's it for part 4 of the Beyond Fibonacci Retracements price series. In this tutorial, you learned how to identify in advance high probability, narrow range price target zones for end of wave 5 and C. You also learned some unique swing and ratio combinations to identify in advance the minimum, typical, and maximum targets to complete a 5-wave advance and an ABC correction. And we also showed you how to use retracements and APPs to identify price target zones where an ABC correction will end and where a 5-wave trend will end. Well, we hope you enjoyed this tutorial. If you purchased all 4 parts of this tutorial, you're going to receive a 5th tutorial free, and we hope you enjoyed that. If you didn't, please join us for the next series of DT tutorials. We hope you enjoyed this. We hope you'll go and do some good trading. My name's Chad James. I'm the CEO of Dynamic Traders Group. Thanks a lot for joining us, and good trading.